Good evening, everybody. Ken at Tortoise Capital. This is the nightly strategy podcast for June 23rd, 2021. Thanks for your patience. Another good day in the soccer camp. We had 15 campers this morning, 8 in the evening, and the numbers are continuing to grow as the word gets out. I probably would have gotten more people if I hadn't made it free. That would commit them more. I'll have to think about that. All right, so where are we in the swing series here on this very interesting daily chart? So we had that long grinding move off the bottom, made a new high 7 or 8 days ago. Then the harsh sell-off, 3 days of hard selling down to a 2.5% correction to this 10-day low. And that little sell-off triggered all of the overreaction and channelings that have been enjoyable the last 2.5 days. So there was really strong moves Monday and Tuesday. The indication was to close those out in the afternoon on Tuesday. Could also have closed them out on the open this morning, or maybe got a little price improvement. But I said yesterday that the way to interpret price action here is that in 2 days you got the move that you were hoping to see that might last 3 or 5 days. So when you have that oversold condition like this, what you're hoping to see is a very orderly recovery and some kind of grinding move like this. It gets back to the previous swing high. So if that took 5 days to unfold, you'd be happy with that. But instead, what we got was a 2-day move. And so there's two ways that we typically think about that. One of them was we say, oh man, this is charging back so fast that surely this is the one that's just going to keep going. And so we get very confident, even overconfident, on the basis of that rapid recovery. But the thing that we will typically not think of is that, for the past 20 days, price has not been able to get above this peak, and this was the price that triggered the selling to begin with. So now that we get back to that same price level, the least surprising move would be a sell-off from this price level. That's the last thing that happened here. And in the previous 20 days, there was no real powerful upward move through that high. That was really the peak. So now in 2 days, it runs back to the peak. And now you got to think, well, everybody who made money shorting that is thinking, well, here's a chance to short it from the same place I shorted before. So there's some selling pressure already baked into the cake. And everybody that made money on this move to the upside is now probably thinking that in the face of resistance, I want to preserve gains. And so maybe that helps to explain the absence of follow-through. But the fact that it only gave back a little bit, I take to be a very positive sign. So it was a third of the size of the previous day's range. It held pretty well all day above the spine of the dragon. It's within spitting distance of an all-time high, and it's very close to breaking above this descending PSAR. So I take that failure to fail as a positive sign. Now, it didn't make a runaway move like we might have hoped, but the point I want to make is that you would not have been wrong making that cash in here and just taking advantage of a very strong 2-day move that you would have been happy if this thing had been grinding up for 5 days and fought its way up here. And if it had taken 5 days to get up to this price level and then started to sell off, you would probably be more inclined to take the gains on that kind of a move, whereas the accelerated recovery makes you want to believe that this is going great. So I take a look at this just at the price level and say, at this price level, the last time it was there, it sold off harshly, so I want to preserve the bulk of these gains, and I'm prepared to trade this intraday in either direction because I now consider this to be in a critical state. Well, that's where I think we are today. I think we are still in a critical state. What we had was the absence of strong follow through, but we also had the absence of strong sell off. So that actually is the beginning of what could be like a sideways quiet channel developing here as the bulls and the bears are cautiously watching each other. And then you'll notice that the dragon has kind of flattened out in here. His slope is sideways. So a sideways at 424 for a while would not be unusual. So I really take this today's range as a yellow zone that it just extends to the right and says, let me see what it wants to do. If it breaks out to the bottom, well then fine. I'm ready to trade that tactically to the short side, right? If it breaks out to the upside, fine. I'm willing to trade that tactically to the upside. I'm prepared to believe that move, but I want to see it get above 426 before I am persuaded. So because I want to see that move, maybe I extend my yellow zone to something like this. I wouldn't be offended if you extended your yellow zone down to the bottom of the dragon and said, hey, as long as it's inside this yellow zone, I'm going to be primarily a tactical intraday trader. But if it breaks out below, let's call that 421, then I definitely want to have a short side play that's going to come down to 414 like it did before. And then if it breaks out here to the upside, well then I'm prepared to hold swings in there. But meanwhile, if it stays inside this yellow zone, I'm really just going to be primarily a day trader and take advantage of a bird in the hand over one, a bird in the hand over two in the bush. Okay? So that's my interpretation. Today was kind of a consolidation day in the U.S. indexes. There's the S&P and the Dow at, let me zoom this in a little bit. The S&P and the Dow at minus 0.12 and 0.2, and Treasuries minus 0.26. Then to the upside, we have techs basically flat at 0.05. We have the Russell was stronger at 0.33. And then yesterday's week ETF emerging markets was today's strong move at 0.61. All right, so let's look at the sectors now that outperformed. Here's agriculture, finance, and energy. So we're starting to see that little rotation happening. Tech was just about equal to the S&P today. So maybe it's starting to stall a little bit. There's S&P biotechs, oil 0.61, blended commodities, Mexico consumer discretionary, blockchain, ARC genomics, all between 0.6 and 1.0. Oil exploration 1.2. The FANGs still strong at 1.38. They're doing well. Simon Property Group, commercial real estate 1.5. Finally, Ethereum gets out of the hole a little bit at 1.8. ARC genomics, or I'm sorry, ARC innovation, I should say. Moonshots, lithium, clean energy between 2 and 2.7. Marijuana strong at 4%. And then the large cap blended crypto 4.7. The companies, the individual companies that did best, Tesla, finally a strong day, up 5% and a quarter at 656. So that's good. That's halfway to 700. So be looking for more gains out of Tesla. Twitter, Virgin Galactic, Alcoa in the material space strong, Devon Energy in the energy space. John Deere is really starting to get it done again. U.S. Steel and Coinbase 1.6, 1.5. Cliff Natural Resources strong at 1.3. I would look for more out of Cliff. That had a large sell-off lately when materials sold off, and that's pretty good, and that's outperforming. U.S. Steel and Cliff and Alcoa are all outperforming XLB, so that's a sign of continued strength that we want to be ready to exploit that tomorrow. Okay, downside sectors. Downside sectors. We have Brazil minus a quarter. Yeah, I moved 7 miles today at practice. Ugh. When you count up all the steps. Almost 20,000 steps today. Wheat and precious, minus 0.6. Lumber, 0.62. Consumer staples, 0.62. Materials, minus 0.64. When materials are minus 0.64, but the metals are doing well, that's a very good sign for the metals. That means that they are buying them in spite of weakness in the sector. That's a very good sign for U.S. Steel, Cliff, and Alcoa. Don't be surprised if there's another strong move up for them tomorrow. Japan, minus 0.7. Lumber and VIX minus 0.8 and 1.8 respectively. The weak companies, Bitcoin Trust minus 0.8, Apple minus 0.21 fractional loss, so that's not much to worry about. So it's feeling like energy, finance, and then those metal companies within the materials. And then I would keep an eye on Tesla. That was a very promising move today, and at 650, it's still, people will still feel like that's cheap because they're conditioned to think its proper price is 900. So I still think there's people that think there's a 20% upside in the near term on that one. To me, the next target up is 700, which would be about an 8% bump. It's still available. So if you can manage a $10 or $15 stop in Tesla, then that's an attractive value trade. Okay. Just two trade frames to work with today. Let me pull those up real quick. Oh, man, they killed me today. All right, so this is a nice swing trade here in Brazil on a swing channeling pattern. So on the daily chart, what I want you to notice is that the entry should be down here around 40.80. All right, at the open, near and around the opening, and that's fine. And then the exit indication is at around 41.52, and that's a really good exit. So the swing trade doesn't worry about these little pullbacks because on the channeling, you get about a 5% trailing stop in the foreign ETFs and tech. In the U.S., in the S&P and the Dow, the stop is 3%, but on the techs and the internationals, 5%. So a 5% stop in Brazil would be $2. So your entry at 40.80, your stop would be down at 38.80. So well off the chart. So these little pullbacks are just noise inside that swing trade, and because of that extra cushion, then on the swing trade, exiting at the open is not indicated, right? On the swing trade, not only could you have that like at 39.80, but you might have even just played this as the PSAR. So even though you enter here, if you're using the PSAR in the bottom of the RL10 as your modified swing trade, then this move here doesn't get you out. And in fact, you might get a 1, 2, 3 entry, or better is the Kata 2. The Kata 2 is excellent here. Then you have the option yesterday of seeing that doji near the close and say, is that enough for me to cash my gains? Because it's right at the same previous sell-off point. So you'd have been justified on a tactical play of selling, half or 80% there of your day trade, and then just keeping the balance as a swing trade and waiting for the swing system to signal the exit. And then this is a beautiful exit here. So I really like this trade. That was probably rather than 0.91 position sizing risk. And more if you're using a tighter stop, say the bottom of the Dragon or the bottom of the RL10. So very nice swing trade. This is Luke doing a wonderful series on FDX. Now you're going to notice that this is not optimized. This is just live trading and getting it done, and he brings home 9R. So the first one is a pocket short, where it's crossing the Bollinger Band mean, so it does the RLXD after an extended run up to Z2. He plays, so that could have been, as an example, that could have been the exit for a swing trade that took the managerial exit when it pulls back to the Bollinger Band mean. So instead of just getting short, that's almost like a stop and reverse. And that's how to think about that. And then this is a collapsing dragon second position as it leaves Z2, and a very nice relaxed sniper exit here. And then a re-entry on the RLXD and a collapsing dragon. That's just as good as it gets. And this second leg down on the collapsing dragon, even better. Just even better. And then I love the 1, 2, 3 exit and then stop and reverse. I might have been a little tighter on that one and then tried to short here. And if you play that short, you would have at least had a scratch. But that's still a good shot short here on the collapsing dragon. And after 5 bars where it doesn't really break down any further and starts, that's still a good exit. And then this is a legit stop and reverse. That's a good scratch exit. Great short, great cover. Great short, great cover. Beautiful SSC. I might have taken the sniper here because as you're into the chop, instead of letting this come all the way down here, I might have taken this. And then if you make that a stop and reverse, then this exit is a scratch instead of a fractional loss. Scratch. Then another just beautiful stop and reverse. Great sniper. This one, I think, instead of scratching in the future, you're going to want to get paid with a 1, 2, 3. And then this is just a perfect SSC, a perfect second entry on the Z3 pinch breakout. And then once that breaks above this hump, that makes this sniper a great exit. Boy, this is 8.8 R. And Luke, you just don't get any better than that. You can make a living on that. Just that technique. You can make a living on a single symbol just doing it. That's your mini DAX, so you get great leverage on your money. It's very liquid, trades continuously. Dude, proud of you. That is professional work. And that's all I'm going to say about that. Keep doing that. Now do that 10 more times, then I'll really believe you. Don't change a thing. Keep doing that. I've noticed in the past sometimes that if I give, positive encouragement, that you almost could feel pressure to do better. So don't do that. I'm not giving you positive encouragement. Maybe I'll give you negative. Don't screw it up. That you'll probably take that the wrong way too. So just keep doing what you're doing. Trust your practice, trust your process. As you document those and you get your lessons learned and you're posting those trades, I've noticed that you're tightening up your technique. You should have noticed that too. And that will tell you that there are no shortcuts, that the shortcut is to take every step. If you try a shortcut where you skip a step, all that means is you're going to have to come back and take that step someday. So you're just deferring that to a later date when it's going to hurt more. It's just easier and better in the long run. Just take every step, take every step. Yeah, the 1, 2, 3, Luke, especially if that's the first 3 bars of the trade and it's moving against you, just get out. Just get out. If it's not moving in your direction after 3 bars and you're already underwater, you get out. And then if you're in the money and it's not like more than a 3R gain or something, and it gives you a 1, 2, 3, just get paid. All right, just get paid, and see how that feels. To just get paid. Think less, get paid more. That's a recipe for success. All right, man. Yeah, my girls are coming home from California tonight, so my son and I are busy cleaning the house, because we live like 2 little pigs and hogs. I was smart enough to sleep on the floor for my back, and then also so I wouldn't have to make the bed to her standard. Because even when I try, she gives me credit for trying, but I know in her heart that she wishes I could do better. But she's too nice to ever say that. So we cleaned the house pretty nice, and got them their favorite snacks, and everything's good. And did all my laundry too, so that's not bad. All right, we're back to bullish quiet. We are now back to overbought in all the dimensions, 30, 90, and 270, and then still well above average on the 10 and the 2. So that's very healthy condition. We'll see if it can continue to build on a second leg up, but the risk Z is postured. It's come back to a comfortable distance away from that Z1. It's back to a comfortable distance, and this would be a natural place for it to recover and then make this move back up. That's almost like a kata 2, but for the risk Z, if you see what I mean. That would give us a low, a higher low, and then it continues for another swing leg up. That would be very nice. We're comfortably overbought. There's still some channeling and overreactions available in the globals. So EFA, that's the Euro-Asia mix. The Asia less Japan is EPP, and then IEV is the European 350. And then EPP is also a channeling. So that to me looks like a significant opportunity to leverage some of the swing patterns for a major global index. 10-day min pains, so I want to highlight Apple and Microsoft. Max pains, JP Morgan and Goldman continue to suffer. Even though finance was strong today, those two are still lagging, and they're both such leaders that there may be an opportunity there. And you should compare that against FAS, the triple leveraged finance. U.S. Steel and Nucor are both max pains, and so even though they were up today, that means there's still more room for them to grow, and the same with metals and mining. So there's still swing opportunities to the upside in those. And I'll just expand that to include Dow Chemical, DuPont. So lots of dojis today in the Dow. Lots of dojis to consider. That's an indication that the entire market is postured for The next move. Yeah, Peter asked me, are we in tactical mode? Absolutely. And the reason I would say that is I'm going to come back uh, to the market health check. When the market is fully valued, like it is right now, and the dragon is sideways and it's had one sell off and then recovery, and today was a almost like a digestion day. Until we get out of the yellow zone, I'm tactical and I'm going to get paid intraday first. Uh, if I get a really strong move to the upside with my day trade, I'll keep 1/5 as a swing trade. But I want to get paid intraday first and lock that in before I start thinking about the swing trades. So that makes this really a tactical mode. Does that make sense, Pete? Responding to a question from the chat room. Okay. All right. And then when you see all these dojis in the Dow, what that also means, uh, the fact that there's all dojis and there's no breakouts in the NDX, there's no breakout to the upside or to the downside. That means the entire market is kind of in this digestion phase. And the good news is that there's also a lot of channeling and overreaction opportunities, and there's buku opportunities, many opportunities in the auto framer. Look at all those that are better than 2-to-1. So you have your pick and choice of things that can really do well. And I'm going to love Goldman Sachs right here. Look how strong that was over 6 months and 12 months, 51% and 79%. And then it had a little bit of slowdown in the 10-day and 1 month where it was in the red. But then today it was a price leader, a percentage leader. And it's at 5.5 to 1, and it was a doji. That is just an acorn ready to grow, or it's a popcorn that's been in the microwave for 40 seconds and is getting ready to pop at 45 seconds. So when finance was a big, strong mover today, and then you see Goldman Sachs and JP Morgan in the same condition, JP Morgan is 6.4 to 1. And it was beaten down on the 10-day and the 1 month, but today it was a percent leader. That's a very strong leader that sold off and is now starting to regain its leadership posture. So when the sector is strong, XLF is strong, and then these leaders have opportunities to catch up, boy, you got to respect the latent power that's implied in that trade. So we'll come back and check them tomorrow. All right, shifting to the ETF 30. I'm noticing XLF here, since we're talking XLF. It's 5.3 to 1 and a doji. That's very good. Very good. And energy is not, it had nothing special. Its lack of signals is almost helpful. I kind of like materials, even though they lost today. When the leaders in the metals were up, it could be that they have more momentum that starts turning XLB around. So don't be surprised if XLB starts to make a run. And then look at its NDXs for 10 days and 1 month. 18 and 14. It's very weak and oversold. And it's at 3.9 to 1. And it's a channeling. Watch XLB tomorrow. There's an opportunity lurking. The auto framer tells you the story of the whole market right now. Look at, there's 20 outstanding trade frames just waiting for you to choose the ones you like. And here's in the framing data all of the mechanical trade frames. Already, the work is already done. I like Honeywell at the top. Great company. Tech is postured for success. I like XLF and mid caps making a strong recovery. And I also like real estate down here because that's in our core portfolio. So I want to take advantage of that if that starts working. The daily squeezes, plenty of squeezes today. Look at that 10 to 1 and 3 to 1 in Merck and MDY, and the S&P is at 3 to 1. So that tells you today really was a doji kind of a day, and the market is poised for a big strong move in either direction. So that's why we're tactical. All right. Want to just jump to the multi-time frame NDX just really shows you there's very few things that have broken out on the 10-day. And so this is like an inside market. It's coiled spring ready to go in either direction. So the coyote still, the master opportunist, is ready to go. All right, that's everything I want to cover for tonight. I could go finish cleaning the house. And you got lots of prep work to do for many good opportunities for tomorrow in both directions. All right, that's everything I got. You guys take good care. We shall see you tomorrow.